And we are live, and good morning to everybody, and welcome to the final day of Behind the Markets for this week. It is the Friday edition, 16th of June, 2023. 16th of June may not be much of a date here, but June 16th in South Africa actually happens to be Youth Day. So to my brothers across the Botswana border, on the other side of the Botswana border, happy Youth Day. It was the day of the Soweto uprising when the students refused to be taught in Afrikaans and they decided to stand up for themselves. And unfortunately, they got slaughtered by the South African, by the apartheid police, who unfortunately shot at very innocent children. And that is the great image of Hector Peterson's body being carried, the child who was being carried after being shot by riddled with bullets from the apartheid police. This is the tragedy of most of it. So today is if I'm correct, it should be the 47th anniversary of this 1976 Soweto uprising today. So happy Youth Day to our brothers across that side. We are connected as one. Now, today we shall be going through Wealth Wednesday or Futuristic Friday. Sorry, it is Futuristic Friday. We will get Brendan in just for a bit. Unfortunately, we have a little bit of a technical issue, but we will kick off on the markets today. As we get started, today we'll be going through our market roundup. And one of the questions I would like to say in today's Futuristic Friday conversation, main things we're going to be talking about is generosity, how to actually leave that generous estate, how to deliver wealth to that generous estate. And finally, the question I also want to answer is what industries is artificial intelligence going to affect the most in terms of wealth creation? So the rise of AI, which industries are the most likely to benefit from it from a wealth perspective? Let's kick into the markets so far. Now, let's get into our market roundup today. We have seen that the Kwacha continued its electric slide negatively after that little bump back upwards, but the Kwacha has continued a negative movement, 0.86% down. The dollar was up 0.86%. You did see that on the week, the dollar is down 5.11%, mainly because that huge sell-off that happened very quickly. But in the last 30 days, we're looking at 3.28% up and 6.17% up. It is in buying posture at the moment. Stock market yesterday went up by 0.01% as Bata shares went up by 1%. We did see that the market is up 0.56% on the week and 12.23% year to date. Bond market was up 0.6% yesterday, but down 1% in dollars. And interest rates came down, knocked down below 24.11, down to 24.133, 24.1033. So that's where we're seeing it now. As we saw, there's a little bit of a tick downwards as there was that little sell-off. We did get news yesterday from one of our economic analysts, Mr. Trevor Hambai, actually did say that the Bank of Zambia was responsible for a sell-off, a periodic selling off of dollars that led to that movement down. But all the backlogs of importers and people in the markets who needed dollars basically gobbled that in 2 days. And that resulted in a huge in the spike back upwards that we're seeing. So that little nosedive you're seeing in the kwacha, in the dollar and also the rand there, that is a result of a massive sell-off by the central bank. As a result, now you can see it curling back upwards, and we're getting back into a positive upswing as well for the dollar, up 6.17% year to date. As we said, the rand is down 1.98% year to date, but unfortunately 8.39% on the month. Cross-border trader inflation likely to cause a bit of a problem here. GRZ bond index. You can see that it's up 12.4% year to date, while in dollars it's up only 5.37% due to some of these interactions that are happening with the FX rate. While simultaneously, we are also seeing that the GRZ composite yield also came down 0.002% yesterday, but interest rates are still up 0.46% year to date. We're also looking at the commodity markets. Copper up again for another day, 0.69%, trading above that 8,500 perspective, while oil has now gone back up above 75.00.05, mainly due to Chinese data, which we'll go through later. And gold down 0.04%, holding steady, obviously, after the Federal Reserve rate hike, and also the Federal Reserve flat, keeping the rates flat, and the ECB hiking rates. In terms of cryptocurrency world, Bitcoin has continued its nosedive, down 3%. There was about 162 million worth of liquidations that have happened in the crypto space due to some of the movements that are happening in Bitcoin. So the selling is begetting more selling. Ethereum also down 4.6%. And once Bitcoin takes a dive, it takes a lot with it. So that 3% movement negative in Bitcoin versus now obviously triggers altcoins are all going all over the place with 4.6% down in Ethereum, 0.82% upwards in gold, in dollar, in kwacha year to date. So this is where the markets are standing, and this is why I keep saying watch out for volatility in the space of the wealth insurance assets. You are seeing that's what usually pushes these things a little bit negatively. As you can see, cryptocurrency in the red, except for year to date figures. Gold is the one that's now on the year to date is at 14.45. So when you look at all these numbers to date, you can see Bitcoin is up 59.8% year to date. Ethereum is up 45.6% year to date, while you're also looking at bonds up 12.4%, 12.2% on the stock market, 14.4%. So we can see that the mainstream markets are moving at about 12 to 14%, with dollars down 6.2. So this is one of the reasons I always keep saying you don't really want to bank your wealth in dollars, because then you're going to play against the central bank, because the central bank's job is to try and keep economic stability. And if that means they've got to sell some of their dollar reserves to push the price down, then they will do that. So I think that's what everyone has to pay attention to, that you're actively bidding against the central bank. If you're trying to keep your wealth in dollars, you do not have the firepower to play the military game against the central bank, nor do you have the strength. So I usually stay out of fights where I know I am going to lose. Cryptocurrency also, unfortunately, that's also pulled by the exchange rate, but also the inherent volatility of it. So that's why the majority of your money should be in the mainstream assets. I always tell people businesses, bonds, buildings, benefits. That is where your money should be sitting, or else you end up doing a lot of damage to yourself over the long term and running a lot of risk. Now, we also are mid-month, so it is time to give our expectation of where the oil price may be. We are actually seeing, according to trends, we are probably seeing about 1.1 kwacha increase in oil prices. The pressure is actually pushing upwards, mainly due to the performance of the kwacha. Oil prices stayed relatively flat, but the weak performance of the kwacha, 5.92% average movement from the previous month, has pushed oil prices into the negative. So I think this is just something that we need to all pay attention to in terms of where the prices are going to be sitting. Other news that we're seeing in terms of our four horsemen: Botswana CPI came out yesterday. It dropped to 5.7%, while the Nigerian inflation rose to 22.41, and food inflation in Nigeria year on year rose to 24.82. So continuing rises in inflation as Nigeria is trying to restructure itself, and obviously trying to affect the interest rate, the exchange rates, and all other changes in the economy. In fact, there has been some news coming out of Nigeria that talks specifically about changes in the forex system in Nigeria, but we'll be covering more of those next week in terms of some of the news to the forex rules that are actually affecting Nigeria. So there are currency reforms currently at work in Nigeria, that the central bank is reportedly going to start allowing people to start trading at one single rate. So this is just something that is being worked on in Nigeria. But some of the headlines that we're starting to see is the Nigerian central bank is going to move to force is moved to force to forces to decide the exchange rate. Some of the other headlines are actually reading: Nigeria allows currency to drop a third in value on the official market. Nigeria nears currency reforms in market determined forex rates. So they're trying to now get the forex market to actually be natural, and that's going to cause a little bit of intermittent inflation, and then eventually there's going to be some standardization going on. Interest rates currently are holding at about 2.65% in Botswana, while US auctions for short-term rates did come in lower. So the yield curve is starting to flatten. You're starting to see the long-term rates coming in higher, short-term rates coming in lower. The ECB did raise interest rates by 25 basis points yesterday to a record level of a 22-year high. US retail sales rise to 1.6%, while EU trade balances dropped by 11.7 billion. They were now in the deficit. US continuing jobless claims also rose to 1.17 million people claiming for unemployment insurance, while Canadian housing starts dropped to 202,000 new home construction projects, while the Canadian manufacturing sales growth was only about slowed down to about 0.3%. So as a result, what we're actually picking up here on the markets is that we're seeing a weakening we're seeing a weakening in growth outlook, stabilization of interest rates, and inflation data outside of countries that are idiosyncratic like Nigeria, who are actually leading towards some of that. So on the other side of this perspective, we will be looking into our deep dives, but we will be taking a break for the meantime as we break into the news, 60 at 60. And on the other side of that, we'll be talking about the deep dive stories that we have, going into what we think AI is going to benefit, which industries will artificial intelligence start to affect globally before it trickles into Zambia. The other part of the perspective, we'll be talking about generosity and what we talk about in terms of charity. You don't want to miss that on the other side of this. Okay, and welcome back to everybody on today's Behind the Market. So thank you very much for joining us. We were taking the 60 at 60 break. Vernon, how are you doing? And hopefully we've got you now on the rest of the ride
Yes,
today.
yes, we're doing great actually. I don't know how's your morning so far.
Good, good, good. Now, time to get back to our main conversation points that we were looking at here. We just finished with our four horsemen, where we did manage to see that one of the big stories is Nigeria's unification of its currency. That story is unfolding as we speak. These are unofficial, unconfirmed reports so far, but we'll be doing some investigation. We've left two questions in the comment section for everyone there. What are your thoughts on the rise of AI? And two, how would you distribute? How would you distribute? Who would you distribute your wealth to? Okay, who would you distribute your wealth to? If you're looking at what would do, Vernon, if you reached your wealth goals, who would you distribute it to, or how would you distribute it? I'm curious.
I'm sure you want to leave it to your children, maybe family. Um, yeah, I think those people, especially the children, you want to leave something for them, especially your wealth.
So I'm actually going to talk about that, and I'm going to cite the book, the essay, "The Gospel of Wealth," written by one of the first wealthiest men in the world of the modern era, Andrew Carnegie, who actually wrote the Gospel of Wealth to help people understand how to distribute their wealth, especially those who have built businesses and have built massive wealth from them. And he actually touches on this point about leaving your wealth to your children and how you should be considering it very carefully. Now, I want to let's first get to the other parts of our conversation today. And in our deep dives today, we've got that Zambia says the $5 billion Batoka Gorge project was overpriced and seeks a new tender. This is stories coming out of Bloomberg. Zambia will exit construction, the contract awarded to General Electric Co. and Power Construction in 2019. Proper procurement procedures were not followed, said the Minister of Energy. This is according to Bloomberg reports on these affairs. Now, the obviously that's going to be a big project because Batoka Gorge is supposed to be about $2.4 billion, 2.4 gigawatts. So it's supposed to add to the grid. So remember that we're trying to get about another 5 to 6 gigawatts through renewable energy from the three investors that we've managed to get, while simultaneously getting another 2.4 gigawatts as well added to that. So we're looking at, by the end of the decade, we're supposed to have a strong, powerful grid where we can be a net exporter. Simultaneously, even the oil pipeline that is going to be created between, between Namibia and Zambia also speaks of an extra 2 gigawatts of power as well. So we really are looking at a seriously transformed gig with major major investments that are supposed to be happening to it. But this is a big mess in the whole look of it. So let's see what they're going to be, how this is going to pan out. Trying to get a new tender, seeing what we can go through. Let's see how this works out. We are also looking at Kenya's finance minister vows to pay all debt and cut the deficit. Kenya says it will cut the budget deficit of its fiscal year next year to 4.4% from an estimated 5.8% this year. Total debt in Kenya stands at 67% of GDP, according to the World Bank. It is considering itself unsustainable. Part of the main drivers of this was fuel subsidies that they were running for the last couple of years. Countries that are running, the biggest problem with African countries is we run fuel subsidies during election years. And then after those election years, it's rough. Zambia ran fuel. We subsidized fuel during election years. It was wild. With Kenya subsidized fuel during election years as well. It was wild for them. Nigeria subsidized again as well. All three nations ran fuel subsidies and they paid heavily for it. They have paid painfully for it. So it is a result that these election-based fuel subsidies are very dangerous for African economies because the aftermath is that there's so much debt to unravel and it becomes very dangerous. And yesterday, I think we talked about the IMF talking about the fact that the tax system has to start paying the debts now, not this thing of trying to get more debt to pay debt. You actually have to run an economy, generate tax revenue, and pay down your debt and walk away from these things. If you can try and also do what countries like China, Japan, India, America do, where they domesticate their debt, where the majority of their debt comes from local players, local savers, the local community that puts money into the market and lends to the government. That creates a more sustainable situation than the international debts that have been acquired because we're trying to use debt to purchase oil. That's usually where the problem comes. We use a lot of debt to purchase oil, use a lot of debt. And oil, no matter what anybody wants to say, oil is consumption, people. Fuel is consumption. It's not an investment, it's consumption. And you never want to borrow for consumption. Asking your nation to run into deficits for fuel or for fuel subsidies is like you, Vernon, waking up every single month and borrowing money for transport. How long before you get bankrupt? How long do you think before you get bankrupt? It's not long. So these are the things that we have to start making sure that when our country borrows, it's for something fixed, it's for an asset, it's for something that will generate economic growth for a prolonged period of time, that it can generate a return on investment through taxes that the government can be able to pay it back, not so that you can live a comfortable life. Okay, that is not how this thing is supposed to work. And I don't know why this always has to be a conversation, but unfortunately, people, when it comes to money, money is a very emotional subject. That is the one thing nobody ever wants to admit. No matter how pragmatic people are, money is emotional. And it makes people very emotional. And how politics affects money makes people extremely emotional. Access to credit makes people emotional. Cost of living makes people emotional. Money makes people very emotional and clouds our judgment from making very good decisions. But what I can tell you for a fact is every African country that's running subsidies is paying through their nose for it right now. They are struggling to actually maintain their budgets at the moment. Nigeria was even talking about 96% of its revenue was going to debt servicing, and it was running huge subsidies that were running those things. That's why they had to let go of them. So many countries are having to let go of these subsidies because of this situation. So hopefully this educates us all that your government cannot give you free oil. Okay, they can't give you free fuel. All right. So this thing of the government will provide for us, let it go, people. Let it go. Now let's get into the other news as well. Copper goes into a two-day rally on China rate cut. Markets are now expecting the PBOC to enact more rate cuts as it moves to spruce up economic activity. The Chinese central bank is seeing that the economy is lackluster, so it's pumping cash into the economy. But however, hawkish signals from the Federal Reserve and completely write off expectations of any rate cuts from the central bank. And this is a tough scenario for things such as copper and metals such as copper. We also did see that oil's yo-yo act continues with boosts from China data after slump on Fed. The data does show that there was a 15.4% rise in China's oil refinery throughput in May, rising 15.4% from a year earlier, hitting a second highest total on record. So there was a lot of fuel actually moving through. Analysts from UBS have said in a note carried by Reuters that they expect the supply deficit to be 1.5 million barrels a day in June, more than 2 million in July, meaning we're expecting oil prices to move up in the short term, while copper prices are being strangled a little bit in the short term as well. So the short term perspective is opposite to what I've been telling people is the long term perspective from 2025 onwards. You are expecting to see oil prices picking up for these next 2 years and then coming back down. You're expecting to see copper prices slumping for these next 2 years and then picking back up. So there is an inverse that's happening in the short term. But after 2025, there's a lot of structural reform that leads to a strengthening position of where we are. Remember what I talked about? Fertilizer sufficiency is going to strengthen our currency. All the oil reforms that are happening right now in terms of we're waiting for the Lobito corridor to be invested in, and also to be able to see if we can get Angolan oil coming in cheap after 2026, and also the pipeline that's being created between Namibia and Zambia that will actualize in 2029. So all these for those structural years should structurally bring down the cost of oil, while at the same time there'll be a rally in copper going forward. After that, in 2025 onwards, we're seeing a rally in copper going forward as EVs get towards an estimated 30 million cars by 2027, heading towards more than 50, if not 75% of new cars by 2030, meaning that for the next 30 years, copper will rally, oil will decline. There's a huge change in the industries here. So that's the big change. And that's where it's going to position Zambia to have a much stronger economic run for the next 30 years. But it's all about management, and it's all about positioning ourselves now. To all who've been asking me what I mean by positioning, getting yourself into the equity space, now getting yourself into the business space. This is the time to start building things when the economy is softer. This is the time to start building your position. In terms of what to start buying now, continuing to buy the high yield debt, because for a longer period of time, we're probably going to see interest rates in the bond market probably a bit lower, but still about 6% above inflation. When the Zambian economy performs, bonds are somewhere about 6% above inflation. So that is some of the data that we will be looking at in general. Now, let's take a look. Also, data show that Peru's GDP grew 0.3% in April, and it missed its expectations. The expansion, however, was boosted by a 17% increase, 17% increase in the country's mining and hydrocarbon industry, meaning that copper was actually recovering. Copper production was actually recovering in Peru, but unfortunately, the agricultural sector shrank by 14.21%. So the increase marks the second consecutive gain as the nation is recovering from anti-government protests that were happening earlier this year. So this also seeing that Peru is getting back into copper production is also what's bringing more copper online back onto the market. That also pushes the prices downwards. So just pay attention to all of that. That's quite important. Other data that we're also seeing, other news that we did. Sorry, the main data point today. I've brought in a new segment to today, Vernon, called "Figure It Out." And figure out is one of the big numbers that we're looking at today. And today's number is 62.3 billion in total green bond sales in May 2023 around the world. This makes it the most active May since the inception of the green bond market in 2007, sources Bloomberg. Now, remember that Zambia has actually given tax benefits for green bonds. We're trying to get the earliest green bonds up in the market, and simultaneously we are looking to target about $400 million of green bond issuance before the end of the cycle of the capital markets master plan. So remember that we are trying to raise a green bond market. So $62.3 billion worth of green bond money floating around. China is one of the biggest participants. They've made strong news. However, America has actually slowed down on green bond issuance, mainly due to the Republicans questioning some of these green projects that are happening here. But $62.3 billion of green bond issuance does show there's a healthy appetite for green bonds around the world. And I've talked about many things that we can issue green bonds for, be it power, be it household solar, all sorts of things that we can start to work around the market in the green bond space to try and benefit from. Good thing with green bonds is they tend to come at a slightly lower interest rate because it is sustainability finance. But the appetite that's sitting out there in the green bond space is powerful already. 62.3 billion. That is our number of the day. People, remember, we are going to be doing one statistic every single day to keep you abreast of what's happening around the world. Now, our chart of the day also does show. Now, the question I asked earlier is, what industries will artificial intelligence affect? And this is a chart that came from Bloomberg earlier showing what AI will bring higher productivity and profits to certain industries. So high-tech industries, so technology is going to benefit strongly from artificial intelligence. You can see that it is expected to see what percentage gains. These are the billions of dollars of wealth that will be added to certain industries. It is the expectation that about 2.6 to $4 trillion of wealth in the major economies will be added by artificial intelligence being utilized. So remember what I talked about last week on Futuristic Friday. I said, with technology getting smarter, the world is going to be dealing with people who know how to use technology, one, and two, people who are masters of their craft. So the two people who will benefit from the economy, and then on top of that, the people who own equities, own businesses, will have higher profit margins to work with, because whenever revenue comes into the business, less of it will be going to labor and more of it will be going to capital. So the owners of capital, the superstars, and the technology managers will be the three who will benefit the most in the future economy. And as you can see, artificial intelligence is going to increase profits drastically in these areas, profits and productivity. So you can see wealth being created in the high-tech sector. The second one, which people don't pay attention to, is the retail sector. Let me give you a simple example, Vernon. I don't know if you've seen those shopping trolleys now, where Amazon came out with them, where you don't have to have a cashier anymore. You just pick your stuff, it goes into the trolley scans all the products in there, you tap your credit card or your bank card on that trolley, so you just walk straight out with your trolley. That's it. It's already, and as you walk straight out the door, it's already deducted the money from your bank account. So the moment you walk out with it. So think about it. No cashiers, stock shelving, gone. Now, some of these other companies, like Amazon, for example, have also figured out how to use robots for inventory management. So robots for inventory management, artificial intelligence for shopping. Where are all the jobs going to be in retail? Poof, vamos, gone. Right there. That's it. And then with online shopping, that will go on the rise once again. Poof, vamos, disappear. So already the retail sector is going to go through a huge restructuring. So there's going to be a huge amount of profitability. And this is the problem I always talk about. All these retail sector companies have always got these strong labor unionists who will say, we are demanding higher wage. And then I keep saying, oh, okay, you are encouraging these people to start buying technology. When your members are unemployed, what are you going to be doing? You're not going to demand. These people have got no obligation to hire you. People have to understand that job is not an entitlement. So if you stress them on forcing them to hire you to increase wages as opposed to the market doing it, you know what happens to most people, Vernon? They start adopting technology. That's what they start doing. People who are forced to do this start adopting technology. So you're going to see the retail sector changing a lot. Banking is already starting to see a lot of this credit scanning, credit screening, already being done by artificial intelligence. There's work being done in the where there's work being done on blockchains on how to trade things like bonds. JP Morgan started it last year. The European Investment Bank also launched about a 200 million euro bond auction whether we're running it on blockchains as well, automated functions to try and do all of this. So a lot of banking activity can be done with artificial intelligence. Artificial intelligence can already decide how much your loan amounts can be based on your behavior. It can track your behavior on that. It can handle queries now. So a lot of the banking sector, especially as you notice that banking is becoming cashless and becoming branchless. So the more banking becomes cashless and branchless, it also, Vernon, becomes peopleless. That's the other component of a cashless, branchless banking system. It becomes humanless. And when it becomes humanless, you get huge profits. So that's the other part of it. So the banking sector, so these are areas we should expect to see artificial intelligence. And I wouldn't be surprised if already some of the banks in Zambia are experimenting with AI in their systems. Travel, transport, and logistics, also another area where we'll majorly be seeing artificial intelligence. So a lot of the tourism sector, things like Airbnb, you can see are really starting to use a lot of AI in their back-end systems to try and help people plan out vacations, the support, if in terms of who you're going to call, putting together packages for you. A human being will no longer be doing that. A system will be doing that, because no longer will you have to call up your travel agents. Can you book a ticket for me? When is the last time someone booked a ticket having to call someone? Not that long. It's not that often, Vernon. Most people book plane tickets now on their computer and on their phone. So boom, gone. Humanness, artificial intelligence, vamos. So huge profits will now be going into the travel sector to try and help, because there's a lot less human interaction needed. The only thing that will be needed in the accommodation part of the travel sector, so it's travel, transport, and logistics, not the actual tourism part. So when you come to a lodge, you can't really have an AI bot clean your room. However, don't underestimate what they're building in Korea and China. They're building robots that can clean people. I'm just warning you. I'm warning you, people, of this. They're building things that can clean rooms. Healthcare will also be there. Advanced manufacturing and package. The least companies that will benefit from artificial intelligence in terms of wealth creation will be insurance, agriculture, telecoms. Ironically, I would have thought telecommunications would have been there, but remember, telecommunications is also about handling the hardware, the infrastructure. And AI can help, but it can't really add as much value. Public and social sector will not really benefit, and pharmaceuticals will not really benefit. Though media and entertainment, I worry that they may be underestimating the impact of artificial intelligence in those areas. A lot of these bottom areas are where Zambia is going to be actively operating. But retail does hire a lot of people. banking is a big profit center of the economy. You can even see that the banks that are registered on the stock market are really pushing digital, be it Zanaco, be it Standard Chartered. You've noticed that they've been pushing digital. In fact, where it's all app done, it's all happening online, branchless banking. I think Zanaco was running their campaign where they were talking about think outside the branch. A lot of these things have been driving a lot of change. So I wouldn't be shocked if AI technology is here. But these are the main industries you are looking for globally for AI to have the biggest impact. So take a look at what's happening here locally, and probably you'll see this is where investments in artificial intelligence will actually have an impact. We did get a note. I did ask people, what are your thoughts on artificial intelligence? We have Blackchain Joe who has written this comment. Tell us about ChatGPT. I know Zambians are still sleeping on this one. They are tight. There will be a tight competition between Google's Bird and ChatGPT. Yes, we will have a conversation about ChatGPT infrastructure next week, and how will it affect the world of finance. I'll be talking about the impact of ChatGPT and finance. Now, people like me have to start looking at being very careful about how we take robo advisory now, because it's no longer going to be something simple. People are opting to do a lot of things by themselves and want to do things by themselves. So I'll talk about how it's actually affecting even areas like mine, and how I have to start navigating around it, because I don't fight with reality. I embrace it and deal with it. That's the way I live my life. But yes, I'll talk about it in the world of finance, especially coming in next week. Now, let's get into our topic of discussion today, Vernon: generosity. How to give out ndarama. This is a huge conversation. But I want to start with yesterday, with the beginning of this week. We had a conversation where we showed Dave Ramsey saying, if you plant corn, you will get corn. If you do wealthy people things with money, you will be wealthy people. But if you do poverty things with money, you will be poor people. So yesterday, at the end of the day, Vernon, and I didn't give you the opportunity to maybe speak about this, and I'll give you your opportunity now, was the story that was moving around, and like I said, unconfirmed, but let's be honest, highly likely, that a group of people who got their CDF gave it to a witch doctor to multiply it, and he stole it. Let me just back up for a second. You may laugh at these people, but let's not lie, people. Even in Christianity, we do this. It's not a witch doctor; it's a papa. Let's be honest here, okay? We do this because we bring money to the house of God, and not for the purpose of believing in the house and trying to build the faith and contributing to the faith. No. We bring money to the house of God because God owes us now. So me, when I bring my tithe, bah, that's what's going to happen. That's how people think of things. Me, when I bring, bah, the storehouse is going to be open for me next week, and I'm getting back. So it's the mentality we give to church with is that I'm going to put my money in here and it's going to triple. Now, I think what people don't understand is that generosity is a system, and I will talk about it in general. But let's just go through. Let's have our thoughts on our friends who decided that instead of getting CDF funds and possibly starting a business, doing something proper, a witch doctor was the best person to give it to. But then, what are your thoughts?
I'm still trying to understand what was the narrative when you talk about multiplying money that you're supposed to probably invest into something. I'm still grappling to understand what they're really trying to do with that. That money was you were supposed to put it into use so that you can generate whatever monies, but one putting in into that kind of a venture, I don't know, have they done it before for them to go around that kind of an alternative? I don't know. It's better it's better, Munyumba, that I can get the money and go give it to the bank and say, you know what, save it up for me and then add an interest rate for me. So by the time I'll be withdrawing it after a few months, it'll have some interest
One thing.
piled up.
They took it out the bank to give it to the witch. It was. They took it out the bank to give it to a witch doctor. So proceed.
I don't grasp really the narrative there. But you see, it's for me, it also entails that there's a sense of laziness in it. You do not go so you can have fast cash. And like Dave Ramsey says, if you you have the poverty mindset, you only do with it only those activities. You not multiply, you not make the best of it. As much as you can have as much money as you would wish at the end of the day, you still but do poor people, stuff with money. It's educating yourself. That's the only way I can tell these young people. And it's funny because every now and then we have young people wanting these monies to be made available to them, and what they do at the end of the day is nothing fruitful, nothing burgeons out of it. So I wonder why you still want to go out asking for money to the government or whoever, and at the end of the day you don't make good use of it. So much so I think this is just an indicator that there is this was also something you mentioned earlier, this very course of a week, of some online betting thing. I will not mention the name because right now
Uh-huh.
everybody's talking about it. Yeah, it is back and forth, and I was even introduced at some point. It's like, it's good every day. Like, withdraw 50 kwacha every single day from the amount that I deposit, and whatnot. Yesterday I withdrew 1,000. It's like, this thing does not sound sustainable in any way possible. And I'm telling you, if this thing goes down and you're surprised that these are scammers, I'll just be here. I'm like, I told you so. Laziness should not be propagated in such matters. You have been given an opportunity to make the best of your life, and the least you can do is go and give your brother, a businessman in the name of a witch doctor, to better himself.
So now, Vernon, as people are busy talking about, we're betting and we're drawing money, let me replay something from last year, because I've noticed Zambians don't learn. I've actually noticed we don't learn. And we always argue when things are not. So let me just replay something from last year that happened in this country.
10,000 kwacha, you expect 10% of that money that you have invested, or even more than that. There were even, again, bonuses like you deposit 10,000, you receive about 1,500 bonus, of which was more convincing because people made a lot of withdrawals, of which was another convincing measure because they had to make withdrawals to prove that the platform is legit. Now our complaint is that why is the government allowing these illegal platforms to operate and then scamming us, the youths? Us, we are vulnerable youths and we want help.
Okay, so today, as you're busy betting, you are not vulnerable youth. Today, all of you who are betting, you are not vulnerable. You're even arguing, okay? But when it goes wrong, you're going to be the ones on TV. Why didn't the government protect? When we tell you people, please control yourselves. Please don't. Not you want government intervention when you've burnt your house down, but you don't want the government involved when you're busy there. Because if the government got involved in your betting activity now, wouldn't you be burnt out? So this happened last year, Vernon. That was Shopee Mall. That happened last year. This video is last year. So just a year later, people are back at it again. They haven't learned. Okay, just a year later, they haven't learned. So this video is going to come back. I'm telling you, people, you're going to learn again. So this is just something I wanted to put out there. Now, the problem I have is that, like I said, people don't exercise long-term thinking with money, and as a result, we end up making very short-term decisions. Another video by Dave Ramsey, I just wanted to show everyone where he's actually talking about this issue of short-termism and long-term thinking that affects people's ability to make decisions. And he's talking about the wealth mindset being attached to the long-term mindset. And listen to him very carefully. Sorry, I think we just got that one a bit incorrect, but we will pick up that video incorrect. That was the incorrect video. But he was effectively saying that if you want to see the difference between the long term and the short term thinking, you'll notice that the long term thinking people have a tendency. He says that the long term thinking people, the wealthy people, have a tendency to make long term decisions. So if you remember that part where he's talking about if you're saying that you reap what you sow. If you do poor things with money, you get poverty mindset. He was also saying one thing he's noticed about wealthy people is they tend to ask long-term decisions about money. They'll say, well, how is this going to affect me? How will this affect my loved ones? How will this affect the people who I know? Will we have money? Will we not? will this purchase of this car bankrupt us or not? How will buying this land affect us? They don't use money out of excitement. They use it tactically. So they don't use money to embrace their feelings. They use money tactically like a tool, the way anyone uses a tool at work, the way a mechanic uses a tool to fix a car. So the reality is they use money as a tool. They don't love money, they use money. That's the difference. And I think this is what people need to understand. You have to be very careful. The reason why loving money can be dangerous, because love is blind, people. Love can blind you to certain things. You won't see things properly. Okay, how many times do we say "Vama love" when it comes to guys that things get messed up? So if you have the same blind approach with money, you have to be cold and calculated and factual. The people, I've noticed that people who are wealthy, they make very cold decisions with money. Like they discard things very quickly with money. They buy things very quickly. They have no problem selling a stock. They're not emotionally invested in the company that they've invested in. They're not emotionally invested. If the stock price goes down and it backs out of the principles that they invested, they just sell it and they move on and they look for the next thing. That's how they treat it. Okay, it's a tool. That's all they are. They're not invested. When they look at land that's underperforming, they just sell it and they buy up something else that's better. When they look at an asset that's not working, they let go of it. They're not emotionally invested in the things that they've put their money in or they spend money on. They've got focus on things that they put money in that make money, but they're not emotionally invested in things that cost them money. They are not emotionally invested in liabilities, because the reason is this: when the asset you have starts turning into a liability, many people are afraid to let that asset go. That's where the problem starts to come. But today, Vernon, I want to talk about generosity, the end game of it all. The end game of building wealth is actually to be massively generous. That's what most people don't understand. And now I'm not saying become a blesser. People. We've said we don't want sugar daddies in our schools anymore. We don't want sugar daddies roaming around. I will echo those sentiments. I don't want to see pot-bellied guys moving around campuses handing out money. Okay, you're distorting the marriage market. We already have problems with a bunch of unmarried 20-something-year-olds, like the gentleman I'm sitting across here. He's not a problem. Just saying that is a problem in society, and a bunch of unmarried young men in this world. Okay, we want to make sure that more men marry in this world. But as a result, what's happening is all these older guys who thought that no, generosity is me becoming the blesser at the club on Friday. That is not being generous. That's just being immature. Okay, generosity we're talking about is the actual investment in society to better it. What made you rich, and making sure that those things are perpetuated in society for the most vulnerable of people. So remember that we've been talking about the 8 biblical principles of stewardship, the mindsets of a steward who looks at God as the creator, who says God owns everything. He looks at himself as a trustee, or they look at themselves as a trustee of the wealth. They're not the owner of it. They are a trustee. And they're a fiduciary who has to operate in the best interest of their higher power than themselves. They're prudent with resources. They seek wisdom in their decision making, and they practice planning and goal setting, and they value being trustworthy. So these are the 8 mindsets. We went through the 5 pillars of being a good steward, and we talked about it from a business perspective, from a personal wealth perspective, being a diligent earner, a prudent spender, a wise saver, and a cautious debtor. So today we're going to be talking about being a generous giver. So if you can earn very well, okay, while also spending very, very, very clinically, saving wisely, and being cautious to contract credit. You know what happens, Vernon? You have wealth. When you earn well, spend wisely. What's it? Spend prudently, save wisely, and be cautious to contract debt. What happens is you have so much excess, you have wealth. And that wealth that you've now pounded into assets, diversified and well, what are you going to do to better society with it? So we're going to talk about 2 perspectives. One is just the general 7 principles, and 2 from Andrew Carnegie's book, the Gospel of Wealth, where he talks about a few things to guide people. So all of you are on a wealth journey. There's 7 principles of a generous giver. 1, people give because it's in our nature, by the way. It actually feels good to help somebody. So it's actually in your nature to give. Stinginess goes against your nature, but circumstances dictate because you're not a diligent earner, you're not a prudent spender, you're not a wise saver, and you're not a cautious debtor. So if you do those four things, you actually have a more comfortable way of expressing your giving heart. Okay? Now, the second principle of being a generous giver is that you're doing it as an expression of gratitude for your life. You're actually doing it because you're so happy about the things that have happened in your life and the things that you've been blessed with that you feel this need to share the blessing. It's like when you've received good news, Vernon, you want to share it with your friends. When you found a good restaurant to eat, have you noticed you just want to tell your friends about it? It is in our nature to share the good things in our lives. So this is why it's just this thing of I'm so happy about the life I've led that now I just feel this gratitude to be generous. The third thing, Vernon, is you are confident in your source of income. One of the reasons you'll find the Muslim community every Friday, and I'm not announcing so that people can go and run to the mosque and run them down, but generally you'll find that they're giving out a lot to the poor is because they're confident that they run stores, they run factories. They're very confident in their source of income. Okay, so they're not scared of with parting with this money because they know that they can make money tomorrow and tomorrow and tomorrow and the next day, and they find a good investment in society being generous. They also, people who are generous also practice generosity as an avenue for economic justice. So how can I equalize things? How can I help those who are less fortunate become more fortunate? Okay, how can I help those? What should I build in society? So, is handing cash a good idea? Well, you give people 150, they give it to a witch doctor. So, what's the better option in society to help people out? Okay, you also are generous as a desire to actually see people prosper. You actually want to see them do well. So, that's where your generosity comes from. And it flows because you're not connected to cash and things as much. You see, if you're a prudent spender, remember what we said, don't build idols in the things that you spend money on. So you have to be very careful not to form those idols. That frees you. Now you can be generous with that cash because you're not looking at that cash saying, that thing I want to buy, that thing I want to buy. You're looking at it as what you can do to help people. But however, the principle 7, which is most important, you may give cheerfully, but you still give strategically and wisely because you actually want to better people's lives. Because if you just give someone cash, you're doing it for your own pride. But if you give them something that will actually lift them out of poverty, that's a different story. And there's also about differentiating between once-off problems and chronic issues. So remember, there are chronic issues that can happen that can lead to people spending, but there's also once-off situations. Someone has had a health issue. Somebody may be struggling to get through college. Those are once-off interventions. Those require cash intervention. But where it's somebody's lifestyle, that's a different story. So in the final thought today, I want to just give you some key points on Andrew Carnegie's book, The Gospel of Wealth. Andrew Carnegie was the wealthiest man in the world before John D. Rockefeller. And he built his wealth in Carnegie Steel. He was born poor. He built up a factory, and he was basically the beneficiary of the steel revolution that made him the wealthiest man in America at that time, one of the wealthiest men in the world. And the key points he talks about is that freedom and progress naturally lead to healthy disparities in society. Where we all have the freedom to make choices and we all feel the impact of our choices, you'll naturally see some people excel and some people do poorly because we have different mindsets and mentalities. That's what separates us. It's the mindsets and mentalities that separate us. Because one group of people will get 150,000 kwacha from their NAPSA, phone Munyumba and say, Munyumba, what can I purchase with this? Okay, so I'm going to put X amount in bonds. I'm going to pay off a bit of debt here, and then I'm going to buy up I'm going to maybe put a bit into a building project. That's what one group of people do. That's a phone call I've received from clients. The other group of people get 150,000 from CDF, go and give it to a witch doctor. So you can see that it's the mindsets and mentalities that separate groups of people and their outcomes. Three things. So the three ways that a person can administer their wealth is leaving it to their children, distributing it at death, and creating charitable ecosystems. Now, he does say it is dangerous to leave vast sums of wealth to your children. He doesn't say leave nothing to your children. He says it's dangerous to leave the vast sums of wealth. Give them enough to have a steady stream of income, but don't give them too much because he says it destroys them. He warns against only administering your money at death, and then he gives dangers to indiscriminate cash handouts. Now he says in the monarchical system in countries, the estates and the greatest portions of wealth are left to the first son, The vanity of the parent may be gratified. So it's a pride issue that drives people to just leave this huge wealth to one person who has not proven themselves by the thought of his name or title to be descended and superseding many generations, multi-generational, our name will be known. The condition of this class in Europe today teaches us that the futility of such hopes or ambitions. The successors have become impoverished by their follies and the fall in value of land. So usually what happens is they spend all that money like the Vanderbilts did. And how many times, Vernon, have we seen people who have gotten land and houses and businesses from their parents? Boom, finished. How many times have we seen that here in Zambia? Or the fall of the value of the thing that you inherited. So he says the actual fall of those values is actually what brings them down. So the Carnegie Institute, and also he does say now about indiscriminate cash handouts. He says one of the serious obstacles to the improvement of our race is the indiscriminate charity. It were better for mankind that the millions of the rich were thrown into the sea than spent so to encourage the slothful, drunken, and unworthy. Of every $1,000 spent of so-called charity, it is probably $950 that is unwisely spent, so indeed as to produce the very evils that it proposes to mitigate. So you give money to people to try and get them out of poverty, but the things that were getting them in poverty was spending money on alcohol, having how many side chicks and baby mamas all over the place. By giving them cash, you're actually propagating this behavior as opposed to getting rid of it. So what does the Carnegie Institute propose are the best places to invest your wealth when you pass, or at least things you should be investing in now? And I'll give you 7 quick ones. As they've said, the church, be very careful with this one, not just giving cash to the church people, but there's also maybe investing in the infrastructure of the church, starting a program. What are the physical things you can acquire for your church, perhaps with your passing? Write this into a will, people. These are very important things that you can say, I'd like part of my wealth to be given to our church and or for a car to be purchased for the church, or chairs, or to be put into the church construction. These are things that are good for society. Donating to university and college scholarship funds, because education helps people get out. So degrees are not useless, people. It's just that they cost too much these days. So scholarship programs will help people not go into debt for a tertiary education, and will give them the leg up that they'll deserve in society. So scholarship programs maybe will be good for you. Free libraries and reading materials. I would have read, if I had time, from Dumisani's book, where he said it was his access to books that opened his imagination to becoming the radical entrepreneur. So imagine if people could, part of their wealth, you've created 5 million kwacha of wealth, you've left 2 to your children, and 3 you go and say, I want a free library in my village or in my area. You're investing in the knowledge of the people. Donating to hospitals and medical centers and research programs. That's important. Health facilities are really important in society. He does talk about public parks and playgrounds. Those are important areas as well that you can donate some of your resources to, or your wealth to, so that you can live off your wealth and donate some of it to that as well. City town halls, you can donate to those as well. Should you have accumulated a strong amount and you're in the financially free space, you can actually go to your town council and say, I'd like to donate to the construction of a new wing or whatever, or the refurbishment, so that people can have a place to gather. And recreation centers. We talk a lot, Vernon, about young people, drunk, junkies on the street. What would happen if more people also contributed their wealth towards recreation centers where young people can play sport, where they can do dance, where they can do all sorts of things and become patrons of those things, or to trusts that can help some of these recreation centers? So these are some of the things you can also consider with your wealth. After you've passed that, because I know about 5 million kwacha is that financial freedom spot. If you're one of those who've been blessed enough to maybe be able to target 10, 20, it's not just about the lifestyle you want. Perhaps you can also start considering what things you could do in society to make society better, and to have a lasting print in society. So that is just some thoughts I wanted to give people as to where you can also look at the end game after you've done your diligent earning, prudent spending, wise saving, and cautious contraction of debt. And now you've got this generosity. You're now open to be free, to be a generous human being in society. Where to do it? Giving it to your children, 9 out of 10 times, 70% of that wealth will be destroyed by the first generation, 90% by the second generation. What can we do? Here's some ideas. There's more avenues, but here are just some ideas for you to think about. And that, Vernon, is where we leave it.
Thank you. We will see you on a Monday. Enjoy your weekend.
Have a nice day, my brother.